Welcome to the Daily Read with Jeff Kikel. Overnight, the AI trade continues to go downhill, quite frankly. We are still seeing this continued rotation out of AI stocks. Overnight, the AI trade really came unglued around the world. Korea's stock market fell into an official bear market, and chip stocks sold off from Seoul to Silicon Valley. Yet this morning, the Dow is up and Coca-Cola just raised its forecast. That split, that's the entire story right now. One quick reminder what this is. Regime Lab is my daily every number sourced read of the market that I developed with AI. It reads the direction, breadth, credit, volatility, and which sectors lead. And it's a scoreboard that we work. And that scoreboard keeps saying the same thing louder each day. This is a rotation and not a market breakdown. Money's leaving the crowded AI and chip names, and that unwind went global overnight while it flows into the rest of the economy. Now, the tell is the divergence. The tech-heavy NASDAQ keeps making new lows, but the Dow, the small caps, and the average stock are holding up just fine. Same market, two completely different stories. So here's the evidence. Direction-wise, the market got handed a gift. Oil crashed on Monday, war fears eased, and stocks gapped up big. By the close, tech had given it all back, and the NASDAQ finished red anyway. When good news isn't going to lift a group, that group is weak. Now, the breadth, the equal weight S&P 500, which is what we would consider the average stock, actually rose to a new high 2 days running. And the fundamentals back it up. While chip makers cratered, look who beat this morning. Coca-Cola raised guidance, and industrials, financials, shipping, and consumer names posted beat after beat. The real economy is delivering, and the AI trade is derating. Even though they're turning in amazing numbers, the market is just not buying it. In fact, they're selling it. Now, credit and fear. The bond market stayed calm and volatility has eased. That's the signature of an reallocation and not a panic. This week, we're waiting on earnings from the hyperscalers, Microsoft, Amazon, Meta, and to some lesser extent, Apple. These will probably be volatile, but can have some down chain effect on semiconductors, data center builders, and the rest of the chain downhill that's part of the AI infrastructure build. So if the CapEx shows that it is increasing and continuing to increase, it's very likely that you'll see all those downhill names or down chain names really pop. And then we see reporting on many of those over the next week to week and a half. So the evidence is Coca-Cola was up, Caterpillar beat estimates, JP Morgan beat estimates, shipping's beating estimates, consumers are strong. The equal weight S&P 500 is hitting new highs, but that AI trade, the NVIDIAs, the AMDs of the world is unwinding. So what does that mean for us, or what do we need to be concerned about this week? Be honest about what you own. For the last 2 years, the market quietly became a bet on a dozen or so AI and chip names, and the bet's now unwinding a bit. If your index fund has quietly turned into a concentrated tech position, because remember, up till just recently, almost 35 to 40% of the S&P 500 was dominated by about 7 to 10 names. So this is the week to look at. It's not time to bail. The broad market's holding, just to know what you're actually holding and whether you want to own it. So here's the test this week. Tomorrow, the Federal Reserve decides on rates. A hold is expected, but it's not guaranteed at this point. And tomorrow and Thursday, the 4 biggest tech names report earnings. So far, this unwind has stayed contained, credit calm, broad market steady. What I'm watching is whether that stays contained or starts to spread. If credit begins to crack, that story changes, then it becomes not a rotation, but it could be a retreat at that point. So, quick summary for the day. Today's market thesis: continued rotation. Confidence is still high. Risk level is moderate at this point. What we're watching this week is Fed and mega cap earnings. And the bottom line is this is a rotation and not a retreat. This is the Daily Read. I'm Jeff Kikel with Exit Rich, Retire Free. Remember, this is education and not investment advice, but if you'd like to talk, you know where to find me. See you tomorrow.